Good morning. Starting with the today's con call. Today, 9th of January. In yesterday's session, we have seen a great volatility for 2020. In fact, in last 3 months, we have never seen this type of volatility. Yesterday, as market has opened, we have seen a gap up opening for gold silver. At one point of time, international gold prices has crossed 1600 level mark, and silver was trading at 1880 level. As Iran has just shooted some ballistic missile, and because due to this geopolitical tension arise, and we have seen a sharp rally in gold, silver, and crude oil prices. Meanwhile, equity market Nifty has breached the 12,000 level mark. But later in the day, things has been cooled down after the request from many countries to have a patient on this point. And later in the day, Donald Trump came out with a speech that right now we are not in favor of war, and we may have some economical sanction on Iran. Because of that, we have seen prices move lower again. But overall, I think what where we have started, we have again came that level like 1550, 1560. We have a day before yesterday, we have started from rally from here. So again, I think market is on a neutral ground. We have to see how this week moves for this geopolitical tension. Unless and until some concrete steps comes, I think market should be on very watchful. Going forward for today's trade, I think gold should be trading in a range only, because one side rupee is going to be today stronger, that could drag the prices slightly little bit lower. But overall, we expect ongoing geopolitical tension, and fund buying or ETF buying will continue to support gold. In yesterday's session, we have seen gold and silver after making a new high, prices drop on account of long liquidation. For today, range would be 39,000 to 40,300 for gold, and for silver 47,000 to 48,000 would remain a bigger range. For today, buy on drop should be the strategy for gold and silver. Whereas crude oil yesterday, we have seen due to geopolitical tension, we have seen a sound recovery in crude oil prices. At one point of time, 66 was the level for WTI, and 71, 71.50 was the level for Brent. But later in the day, market has corrected. Right now, WTI is very well holding above $60 mark, and Brent is holding $65 mark. Overall, we expect this geopolitical tension will continue to support crude oil prices. Yesterday, inventory also came showing a build up. Because of that, also some pressure was been seen in crude oil prices, and we have seen long liquidation in crude oil prices, and prices dropped by almost more than 5%, closing at 40 to 60. I think technically things have been slightly in oversold. If a level like 42, 30, 40 comes, we should buy targeting 4300, 4340 on higher side. Natural gas in the line of expectation. Yesterday market dropped by more than 2%. I think today we can see a little bit bounce looking to the inventory data and all. 155, 156 could be the good level to take short for natural gas, targeting at least 150. Immediate range would be 150 to almost 156. Sell on jump should be the strategy. Coming on base metal, after the US and China trade deal, things are improving for base metal. Out of all base metal, we are very much bullish for copper and nickel. No doubt, zinc also showing a very good strength. Yesterday also we have seen short covering on the counter. Unless and until market breaches 180 level, we may see a bounce up to 185 in case of zinc. Whereas copper holding above 450 can give us a target of 454, 455 level. Nickels looks sound for a target of 1060. Thank you.